Good morning and welcome to the Next Gen Payments and RegTech Forum Part 1, Stepping into the Future. I am so excited on behalf of QUBE Events to invite you to our first event of the year. We were feeling there might be some webinar fatigue out there, but I'm seeing the numbers and we're seeing the support, and we're so thankful for that. It's largely due to our amazing panel of speakers and all the support we've been getting. So thank you so much to our speakers for your contributions. We appreciate that. And it really is about sharing knowledge, sharing experiences, and keeping in touch. So we're so thankful for that. I'd like to also thank the sponsor of our event, iSpiral. We so greatly appreciate the support we get, and the iSpiral is doing an amazing work in terms of RegTech and the AML and KYC solutions. So we're excited to hear more about that. I would also like to thank Marta and the QUBE team for everything they've done in putting this event together. Marta will say a few words shortly, and to Robert Courtney, who's our industry expert that is chairing the event today. Big thank you. You're a veteran of QUBE, and we're so thankful for all the support. And we're really looking forward to exchanging those insights and those ideas. So thank you to all our supporters. Thank you to everybody that is participating in today's event. Marta, a few words from you.
Yes, thank you so much, Lily, and welcome everyone. I'm so glad that we can meet even virtually here. I hope you will have a good time. Please ask the questions, take the expertise of our wonderful speakers, and yeah, we want this to be also interactive, and I hope it will be fun.
Wonderful. Well, no, thanks, Marta. So yes, exactly that. We've got a chat column. There'll be polls during the event. You can see in the people column on the right-hand side who's joining us. We've also shared the attendee list. Any technical support you'll have, you'll see a number that you can call. So thanks to everybody. Robert, I'm handing over to you. Everybody, we wish you a great event and look forward to all the feedback. Thank you so much.
Thank you, Marta, and thank you, Lily. That was a great introduction, and I have to say that Marta and Lily have pulled all the stops out today to get us a fabulous group of payment superstars to take us through some of the things that have been going on in recent times, in the last weird and wonderful year we've had through COVID, and also looking at where the future and what's been accelerating, what have been the emerging trends that have been coming through the payments market, and how it's adapted to the way in which society has moved on. So things like the growth of contactless. Many of you will have seen today that the UK itself has decided to increase contactless to £100 now. The growth of the sort of virtual world and virtual currencies, and the sort of way in which the central banks are now jumping into this space with their central bank denominated cryptocurrencies. And then we've got the likes of Amazon, the likes of Facebook, all coming up the side with their stable coin offerings. Is that going to be disruptive to the market? We've seen the reaction in the UK of the HM Treasury and government to how they might regulate these new stable coins. And we've got some good discussions around where that's going. And then the sponsor of this event, they're really good at talking about what this RegTech and SupTech are that are coming on into the marketplace now. So the whole growth of this whole new industry of RegTech, or is it a new industry? You'll find out later. It's just been a really exciting year, and I'm really excited to have the guys on board for today's event. Two great panels with great speakers. Alongside this, you'll see that there is a poll that is set up. If you click on the polls one, you will see there'll be 3 polls that will be going through the event. And at the end of the event, in my summing up, I will take you through the results of those polls. The first poll will kick off as we start the first session, the second one as we finish the first session, the final one as we start the second panel group. So, and Marta is looking after those and making sure we keep all the answers confidential, so no one's individual answers will be kept, but we'll be able to give you what the results of those polls are at the end. I think that would be very interesting as well. Equally, if you have any questions for the panel, please put them in the questions tab. Just type them up and we will get the panel to answer them. If we can't answer them during the session, then members of the panel will personally respond to you after the event. So without more ado, I think that's where we are. I am Robert Courtnidge, I'm an independent expert, and I have been in payments for the last 30 years, kicked off my career at Citibank back in the early 90s, and have been hooked on payments ever since. And so let's kick off this first session, which is all about the emergent new payment ecosystems. And these have been the sort of ecosystems that have been growing up probably over the last 10 years or so, but some of which have accelerated more during this lockdown period. And I will now introduce each of our panelists, or rather I will give their name, and hopefully they will then join the stage and can introduce themselves. So the first panelist we have for the first session is Ellie Bethruthi from Amex. Ellie, do you want to just say a couple of words before I introduce the next person?
Sure. Thank you, Robert. Thanks again, NPF, for the invitation. So I'm Vice President in charge of European Government Affairs at American Express, and as well I am the chair of the European Payments Institutions Federation, which is the main non-banking payments association in the EU. And I'm glad to be here with you today.
Thank you very much. And our next panelist, I always pronounce his name wrong, so apologies. Gus Boudwin from the Dutch Payments Association. Gus.
Yeah, thank you, Robert. It's actually Gijs, but it's a horrible Dutch name which nobody else can pronounce. So Gus will do fine for me. So I'm glad to be here. I know many of the colleagues. I've also been in payments for 35 years, I believe. At the peak of my career, because I now am the general manager, not only the deputy, but the general manager of the Dutch Payments Association. But my capacity here is more as vice chair. I served 3 times as chair of the Payment Systems Committee of the European Banking Federation. So I've been around a while, I would say.
So I'm now going to introduce our next panelist, and he is Barry Parker from Citi. Barry.
Hi, good morning, everyone. Yeah, I'm Barry Parker from Citi. I look after the payments technology for Europe, Middle East and Africa here at Citi. I'm also a career payments person, but my career is slightly shorter, just under 20 years, and spent the last 12 years also at Barclays, also in the payments domain. So pleased to be here this morning.
Thank you, Barry. Next up, another veteran. I'm sure he loves to be called that. Paul Tamela from Finastra.
Thanks, Robert. A veteran indeed. Yeah. Well, so look, I'm the global head of payments at Finastra. We work all over the world. I too have been in the payment industry for what seems like an eternity. I was just trying to calculate. My first job was actually taking a 8-inch diskette up to VocaLink to try and get some payroll to work. So you can work out how old I am from that. I also sit on the advisory board at the PSR as well. So great.
Thank you, Paul. And finally, not least, from our great sponsor, the Managing Director of iSpiral, Christos.
Thank you, Robert. It's a pleasure to be here. So I'm the director of iSpiral, which is a regulatory technology company. Myself, I have worked for several years in tech companies and startup companies in the US before moving back to Cyprus. And then I have been working in the regulatory environment for the last 13 years now.
Thank you very much, Christos. And Christos is going to be talking a bit at the end about the whole RegTech space and how iSpiral work in there. So without more ado, I'm going to kick off into some of the questions. And I've had a great chat with each of these panelists individually ahead of time. Some really good information. But we're going to try and concentrate that down and get some great points across to you. So the first question, I just want to go to Ellie, if that's okay, at Amex, and talk about the sort of instant payments and the real-time payment scenario and the whole thing that's going on with the European Payments Initiative, the EPI. Can you give us your insight to what's going on there, and is this going to change the debit market?
Thanks, Robert. Well, first, let me start by saying, like, we are not, as Amex, part of the EPI, maybe just to avoid any confusion that could be out there. But however, so what we've seen is that instant payments, I would say, or SCT Inst, so for those who know how the scheme has been developed, is something that is very positive. We do view it as something, or as a technology that could really change the payments market in the future. And as you know, the EPC has said before, or as you know, also the Commission is saying, EPI is one actually solution that is working with SCT Inst, but you might have also other possibilities that could be out there, other products that could also be based on SCT Inst as such. So from a theoretical perspective, I think it is very positive to see a new competitive solution that is out there. It is, I would say, still very, it's a very new development. We haven't seen, how this could work in practice, and this would not be seen before a few years, I think, in time. But at least from Amex and EPIF's perspective here, we do welcome this development. I think it has the potential of, bringing a new solution that could be beneficial to merchants and consumers. But I think what is most important is once it would be there, is to see whether there would be a take-up and whether, this is something that, again, the stakeholders would favor. But the potential is there. I would maybe let someone like Gijs comment more from the banking perspective also, what would that mean? There would be still, some questions around what would be the role of national card schemes that are still out there, how they would, be working, or what is the space they would have in the new era once EPI is out there. This is maybe something also to consider by this panel and what the future could look like. But I guess we know politically why EPI has been supported very well by the European Central Bank and by the European Commission. It has a sovereignty angle. We're talking a lot about, the strategic autonomy here in Brussels. So in the area of payments, the translation of this strategic autonomy is called EPI. So politically, there is a support. The structure is out there. Now I think the proof is really in getting the solution out there and seeing how it would really work.
Gus, do you have some thoughts on that? I know Ellie referred to you there.
Yeah, well, of course. Maybe if you step back a bit, if you look at where we're coming from the old days, I mean, the payments in general is basically a dissatisfier. It's like water coming from the tap. It's all well and fine if you turn on the tap and the water is there. Nobody gives you a compliment to the water company. But wait for the day that there is no water coming from the tap, then you're on TV and questions in Parliament. We all know that, and that really is, at least in our context, and I think also in the UK, payments being a dissatisfier and payments taking forever in the day and age of SMS and emails. The industry could no longer explain why on earth could an SMS or an email arrive almost instantly, and why does a payment take forever, especially in a cross-border context? So it's not like that. Let's say in the old days the banks go, "Ooh, let's do a shiny, exciting new thing. Let's invent instant payments." It was sort of forced upon the industry, of course, because we could no longer explain that Target 2 in Frankfurt was closed over the weekend, and it's not the banks, but it's the central banks that don't clear and settle. And we tried to explain that for decades, and at some point in time, people just don't accept that anymore, and we couldn't explain it anymore. And then, of course, faster payments and instant payments came about, and so everybody said, "Okay, we'll do it because we can't explain why it takes so long." But when it got there, then it's finally provides a new and alternative rails, let's say for the cards rails, and then you get into use cases that were not available other than by cards at the point of interaction, as I think Eli said. And then, well, it becomes an asset, and then we get the European sovereignty thing, that we all want homegrown European solutions. And what do you do if you don't want those homegrown European solutions for the sovereignty of Europe being based on the cards rails, which is perceived to be owned by non-European institutions? I will not mention any names here. So then this instant rails, payments rails, is to be the European alternative for the, let's say, the Chinese or the American rails, and that's good for the sovereignty of Europe. And that's why the European Payments Initiative, of course, will be built. Will build its use cases on the instant payments rails, but it will still be card-based, well, card-initiated payments, but they will not lead to a payment that is executed over the card rails, but it will just execute an instant payment. And for the consumer, probably doesn't make any difference.
No, the consumer won't see it. That's the best point. Barry, do you have any thoughts on this area? I know it's real-time payments are key to you as well.
Yeah, I think the reference to the use case, I think, was spot on here, right? Because if I think about when, say, UK faster payments launched, it was exciting, but nobody really knew what to do with it, right? It was a concept, right? And yes, you could get your money to whoever over the weekend, but what was the use case? And I think what we've seen now over the last sort of 10 plus years is the use cases now are driving the central banks and the countries to say, we must have this, right? And I think we see that, you know, in Europe, and I see it as well in some of the emerging markets, right? Again, big push now to sort of almost leapfrog some of the more developed economies with the rollouts of instant payments. And I think what will be really interesting with the likes of SEPA Inst is, if I think back to the sort of old days of when SCT was rolling out and SEPA end date and the challenge of getting everyone to adopt and the sort of like the stick rather than the carrot, I think we're going to see a whole different ballgame with SEPA Inst, because people are going to want to migrate. They're going to want to get that experience, both on the consumer and on the business end. So I think it's now no longer a differentiator. It's a necessity now for central banks to offer real-time payments.
Paul, you with your many years of experience, how do you see this playing out in the longer term, especially, I mean, in the UK's environment where we've got faster payments for quite a while now?
Yeah, look, I mean, faster payments was kind of forced upon the UK, right, by the UK government, and let us not forget, it wasn't long before that the actual clearing methodologies was between 5 and 10 days, which had its history back to how fast a horse could get from the north of England to London. That's why it was 5 days, So things have moved on fairly quick. But when you look at it from the bigger perspective, you do need a ubiquity across Europe to be able to get EPI to come. And so if you sort of, pull back the unfortunate plumbing pieces that Keith was talking about, there actually comes down to, well, if everyone's going to play, then everyone's going to have to be, using RT1 or TIPS or what have you. And actually, we're quite away from that, even though there are some end dates in theory coming up. But the truth of the matter is, if that's not there, then EPI won't have any legs, because there'll be no rails for it to go over. And it's not the first time we've had a look at EPI. We've had a few goes in the past with different names. I do think, though, that Barry's point is right. I do think people want now to get to immediate payments. Maybe not because it's immediate payments, but more because it's the digital opportunity that changes everything. And I think all of those things are all bundled up together, and depending upon which part of the fence you're on, you might see it as being the digital change, or you might see it as a ubiquitous change, or you might just see it as an opportunity to bash two card networks. And depending upon where you are in the industry, it's one of those.
And when we were having our chat before, we also looked at the whole request to pay piece. Can you give me your feedback on how you think that might affect the industry as well? I mean, that's another instant payment.
I think that request to pay is actually the real thing. You know, the others are just the plumbing, if you will, that goes underneath. And so at the moment we have, you know, SEPA DD, and we have, you know, all the credit transfer bits, and you know, we have different 14 flavors of those throughout Europe. And actually it's very hard to join those up. But when you get to something that essentially says, hey, do you want to pay this bill? Yes, I will pay the bill. Click and it's done. And effectively it's immediate payments that actually tidy it up. That's the use case that I think will actually take over. And whether that's EPI or it is the use case, I'm not sure, but I do think they are inextricably linked. But I do think that means a lot of things. One, is the industry generally ready for a 24/7 always on? And are the users of that, so, you know, telephone companies, water companies, gas companies, are they ready for that? If I get a notice to cut you off on Friday and I pay at 8 o'clock, I would bet you a penny to a pound that you're going to be cut off on Monday. So when you take it up a level, I believe that, you know, request to pay truly is the use case that uses the other pieces, but it then also requires that the rest of the world, if you will, comes online and uses it. And that's a long way away.
So request to pay of itself seems to be a sort of a step forward beyond just instant payments. It's a use case in many respects.
Yep.
I mean, Gus, how do you see that from a regulator point of view, from the Dutch Payments Authority? I mean, is that going to be a big game changer?
Well, you know, at the European Payments Council, it just published the first version of the request to pay rulebook, which it will be also the service will not be exclusively for regulated institutions, because the request to pay messaging service itself is just a messaging service. It's not the payment itself. So for us, it's a new thing. Of course, the payment itself can only be executed by regulated entities. But the RTP service itself is only a messaging service. I share also the legal support group of the European Payments Council, and it was pretty difficult for us to get our heads around it, and even consulted the UK colleagues how they did it in the UK. I will not divulge what they told me, but it's a new experience to have a scheme. Not only with rubber-stamped entities by central banks and NCAs and so on, but basically anyone can provide the service. So that is why the EPC had to write out a tender for a sort of a certification body that will somehow establish that any aspiring participant can abide by the security rules and so on and so forth. So that's one thing. I partly agree with Paul on the use case. I don't believe, but it's also a cultural thing. For instance, the Dutch community or the German community, we've had SEPA direct debit since 1967, and it's not just going to go away. I mean, for the large corporates, for the utility companies, it doesn't make any sense to have billions or millions and millions of RTPs, and then you need to wait if the consumer pays it, and that may be instant or not instant. For many use cases, the direct debit combined with the consumer protection it carries with it is a perfect instrument. It is the cheapest, most efficient. It's a fire and forget thing. You give a mandate. But if you don't trust entities, you probably don't want them to just grab in your payment account. It's an emotional thing. So the one-off payments, etc., the one-off direct debit doesn't make any sense if you have an RTP facility, which is also instant, I would say. So it depends on the use case, and they will probably coexist. It will also be a matter of cost. In many communities, the direct debit is by far the cheapest. The large corporates have adapted, of course, their internal systems, as Paul alluded to once a month I run this batch, and then I know when I get the money, how much money I get, and of course some of it will bounce because lack of funds, but I do not have to wait for 10 million customers to all click the yes button because I sent them a payment request. So there's room for both use cases, I would say.
And Ellie, from a sort of Amex perspective, or actually from your EPI perspective, I think probably more relevant. Do you see this request to pay being something that's going to transform, or are you more in Gus's camp saying that the direct debit system has been working so well so far, why change it?
No, I agree with Gijs, because here it's just like, again, one other possibility, and I would agree, like it would depend on the use case. And I think there is room for the different solutions that are out there. There wouldn't be like one killer solution. Yeah, you would have many possibilities. Some would still prefer, the transfer. Some would prefer, the card. Some would prefer to have maybe request to pay, depending on really what you are trying to achieve. And I think that's really great for competition.
I mean, Robert, I just had one point from my perspective, right? Which is, I think if you look at sort of the more developed economies, where there's high penetration of direct debit, I'm completely aligned with what's been said, which is these things will sit alongside each other. The consumer is lazy, and I include myself in that, right? I really don't want to have to worry about this. Fire and forget is perfect. If I look at some of the more emerging markets, and especially the likes of Africa, where direct debit really is not even a thing. And where it even exists as an instrument, the uptake is absolutely tiny. I think in those markets, RTP will be a real game changer. I think you'll start to see more happening in that space, especially as sort of like you think of the broader use cases about the likes of RTP working with wallets, so you can even start to move beyond the banked community into the unbanked world. So I think there's it will depend a little bit on the markets, but I think certainly for some of the more sort of developing markets, this will be a real game changer.
And Barry, this is because of trust, right? I mean, so
correct, yeah.
On this, it's because there is no trust in the.
Yeah.
I do think there is another issue that if you look at direct debits from the bank's point of view and from the institution's point of view, it's great. I mean, it's great. But if you look at it from some of the most vulnerable people in society, which I think is where the regulator is coming from, direct debits don't actually work because they may not have enough money to have that contract. And so some of the detriments that we worked on when we were, trying to build the NPA in the UK, were actually saying, actually, if you have a pay-as-you-go contract for a phone, you get a much worse service than if you have a contract. But if you can't guarantee that you have the money in your bank account, then you go, on the worst service, which effectively is, a pay-as-you-go. So I think there is a balance, and I think the regulators are quite concerned about the difference between the two. We'll see how that plays out, but it's going to be around for a long time yet. Let's be honest.
I can see somebody's. I was going to say I can see some. Sorry, Rob, I was going to say I can see someone's asked a question about whether
exactly.
And about whether it might be regulated for utility companies. If I think of the likes of Ofgem, I did a project with a big a utility company a few years ago, and Ofgem have really sort of clear guidance about what what they can and can't do in terms of payment collections and the service they offer and so on. I think RTP, as it becomes more mature in certain things like gas and electricity, maybe not so much in the telephone space, but certainly in those, I can genuinely see it becoming regulated that you must offer RTP as a payment method.
If I may add, and not to just, we're proud of it. Some of you may have heard about Ideal, which is the most popular e-commerce payment system, account-based system. It's been around since 2005. Last year we reached 1 billion remote payments just in the Netherlands. I mean, and it is a request to pay. So for us, it's already been there for that use case, remote payments in the online environment, and it's hugely successful. But it's just a request to pay. So there are great use cases, both for RTPs, both for separate direct debit, also because of pricing differences, liquidity management differences, corporate needs, which Barry will better know than I do. And coming back to instant payments, we had a pretty hard time with the, let's say, the European Association of Corporate Treasurers. And they said, oh, what on earth? I don't want the liquidity instantly for each and every single payment. I will only look at my bank statements at 3 in the afternoon, and then I will do my liquidity management. I don't give a hoot. I need a payment confirmation or a payment guarantee to trigger my logistics, the warehouse that I can ship the shoes. But I don't need the money at 7 in the morning if I only look at my balances and do my liquidity management at 3 in the afternoon. So of course, it will, as Barry said, it will take some time before this will trickle down and all these processes will be optimized to fully reap the benefits of instant payments. But it has to be end to end to really, let's say, deliver all the benefits, I would say.
So I think the next topic really flows into that last answer and the way in which things are moving and why we might want real-time payments, and that's the whole question of open banking and how that has brought itself through. I mean, obviously we've had the push by PSD2 into open banking, but it's been around for a long time. It's in many countries. Barry will have some experience with open banking, I'm sure, around the world as well. So I'm just wondering if I kick off with Ellie again, if that's all right, and just get your thoughts on the open banking move, and obviously how that fits in with what we've just been talking about, real-time payments, and clearly there's a synergy there.
Listen, I do believe open banking has a real potential, to really change a lot what's going on, and we have seen it, in the UK and in the EU to a certain extent, and in many other markets actually across the globe. And as most of us here on the panel at least know, and the participants I'm sure, the EU has already been announcing and planning to move to what they call open finance. Yeah. So in essence, to go from only payments accounts to move the open data on more products. So be it savings, be it insurance, be it other financial products. So we're still in the area of finance. That's why we're calling it open finance. Theoretically, this should pave the way to the third step, which is the open data, where then you would be able not only to limit the use of data to one sector, but then to have also other products in other sectors, be it medical and the utilities domain and so on. So going back to open banking and maybe a bit to open finance, this is, I believe, to what Gijs mentioned also before. Sorry, I'm referring to you again, Gijs. You need to explain also to consumers not only why you're not doing faster payments, but also why can't you have cheaper payments. So you need to go for cheaper payments, faster payments, and secure payments. I think the three need to be together. There shouldn't be any trade-off amongst the three. And I think with the technological advancement, open banking offers a lot of potential, and open finance even more. However, we've seen, at least in the EU, that there are certain I would say aspects that are not yet addressed. One of them is API standardization. We believe this is something very important, and in the UK it has shown its effectiveness. So this is something I believe in the EU we should address this as quickly as we can. Why? Because you need to give consumers again the ease to be able to using one app, one standard. Same thing for developers, and same thing if you want to have APIs that work across the EU. You don't want to be developing different specificities and different rules. I mean, it doesn't work this way. You need a regime that could work across the EU, and then you would have even more take up there. You have the definition of a payments account. What is a payments account? You could have, again, differences in different member states. We have seen this internally when trying also to roll out some products. We need also to have a very, very clear definition and what is in of the definition. We might need something also similar from a regulatory perspective, I would say. We know in the UK we have the open banking implementation body. We need something, I believe, in the EU similar to be able, again, to interpret or to give guidance around certain issues. And these pieces are really important when you look to the future and to make open finance a success.
So I think that ties in very well to the question Frederick's just put in. He's saying a question to refocus the discussion is the regulatory aspects and what are the consequences of these new and modern payment systems on the KYC, AML, CTF regulations, and how will PSPs adapt their internal compliance infrastructures to ensure they fulfill their obligations. I think this might be a good time to bring in Christos and the RegTech solution.
That is a very good question, definitely. I mean, from what all the panelists have said up to now, definitely it brings into the picture the compliance dimension as well. So that means that more analysis and real-time analysis should be done from the regulatory point of view of doing transaction monitoring on a pre-execution level than post-execution level. And definitely taking into consideration many parameters needed, like the transactional behavior of the clients, peer comparison. So definitely this direction that the PSPs are taking and the regulators are taking are giving you the dimension of a more real-time analysis of the transactions that are coming in. And at the same time, whatever is being discussed as far as identifying the client that you want to make a transaction with. So these are different the dimensions of what is needed from the compliance point of view.
Thank you. I mean, Gus, it'd be good to bring you in from, I mean, as you said, Ideal has been around in the Netherlands for many years already. How does Ideal cope with dealing with all the AML, CTF stuff and transaction monitoring in a real-time scenario?
Well, to be honest, it doesn't. Ideal is just a scheme, and it will trigger SCTs and later on SCT insts. So it will. The payment itself is part of the regular payments flows, and the regular AML and whatever compliance checks that banks need to do. It's just it's a request to pay triggers a payment, and from there on, it is just a payment, which is subject to all the usual checks. So that's no different from any other payment product. But I would like to to pick up on what Christos said. We recorded another panel this morning. There was a PayTech study commissioned by the European Commission. It will be broadcast next week, also with the Commission present, and we also looked into a little bit into the future. And one of the colleagues, Arturo Gonzalez McDowell, whom some of you will know from Eurobits, and myself, when Trisham Gundung Singh said that at Amazon there is 1,000 people currently still busy implementing strong customer authentication as just one of the aspects of compliance, KYC, and so on. That if one of the big things we need to take care of was the common view looking forward, that we need more principle-based regulation and probably need more technology in order that we have enough resources just to innovate and compete instead of just trying to be compliant with whatever new regulation is going to be out there. So the conclusion was that RegTech is going to be a lot more important, but also we need more principle-based regulation, and we should not make the same mistakes we have done with PSD2. We should learn from that. Having said that, another one came in, and that's the one, the data economy, indeed. We're not talking about open banking anymore. It's open finance, open data. But here we need, and that was another conclusion, we need to have a clear line of sight as a European Union, at least, and that goes for the UK probably as well. What do we want? Because we have just had a nice experience as there was an unprecedented coalition of the banks, the payment institutions, the TPPs, as a reaction to the draft guidelines of the European Data Protection Board on the interplay between PSD2 and the GDPR. And we are not very happy with what has happened, what they have done with that letter and the final guidelines, especially the principles, pretty strict principles, of course, of data minimization. We need to be very clear on what we can or cannot do going forward. That's one. And the other one is we all love the principle of fair distribution of value, but that would mean making agreements on who gets what. And then we have another institution in Europe called DG Comp, which doesn't make anyone's life easier in that respect. So I said this morning, if we cannot get the business model right and the way we think we can use the data, of course, with the consent of the consumer and so on and so forth, we need to be very, very clear upfront, because that was one of the mistakes we didn't take care of in the PSD2 process, that the data protection, the GDPR angle, was in a different silo of the European Commission than the PSD2 context, and we still reap the sour benefits, if you will, of that mistake.
Yeah, I mean, that has been an issue from day one, and I still remember the debates when PSD2 was coming through, because GDPR had already come out, and they don't fit hand in glove. The requirements of PSD2 on the holding of data and the ability to go through that data for compliance checks and KYC and all that stuff is far greater than the right to be forgotten, let's say.
Robert, maybe on this, it's just a quick comment, because, I mean, at APIF at the time, we have shouted, we have talked, to MEPs saying, like, please look at this, we need to manage fraud, and maybe the next item we're going to talk about contactless and fraud and so on. And we would need, data to be able, to combat that. And that we're always, the answer we're receiving is, no, this is something, that is previewed. I don't remember the number of the article yet. But again, now you look at what's going on and you see, wow, yeah, we knew that this is going to happen and this is really important. But still, the problem is there. So we need, but I just want, everybody here, at least today, to know that we knew this is going to happen. And we talked, to policymakers at that time and legislators about it. And I don't know if we weren't taken seriously or not. But again, the problem is there.
Yeah, I mean, Paul, you again, I hate to say you've been around a while, but this whole question of how it all fits together, this is not something that's unintended consequences are not new, are they?
No, I mean, if you just think about payday loans, right? There was an unintended consequence of faster payments, and now we've got to scrabble it back in the box. But I think the business model thing is really quite an important level to come in at, because if you think about it from point of view, you get open finance, open banking, and probably open payments, and they're all at different layers of interactions, and it's quite hard, I think, for most people to understand, at which level are you actually talking about now. So, even when we say payments, depending upon where you are in the world, some people say, do you mean cards? No, I meant the bank-to-bank piece. Oh, you mean corporate stuff, and you get into this conversation where it's frankly a bit like a fax machine, trading protocols till you can actually speak together. And if we can't do that, and I struggle with that on a daily basis, then the business model piece has to come in, because without it, you can't talk apples to apples. And I don't mean, US companies. I mean, we just can't get to the real nitty gritty. So you have sterling work going on where people are, trying to, creating, PSD2 and SCA. And then you go, I wasn't actually thinking about what those guys over there were doing. I was just doing my little bit. And so then somebody says, well, can we actually push this back 2 years? And so I think it does need quite a holistic, joined up approach. I actually did like the RPS. I thought it was very, very big in its scope and its ambition. And I think it probably gives a confidence statement about how DG FISMA is feeling. But even when you get into it, you've got to sort of trade out layers. And I think the layers are the conversations that we really need to have. So, there's a guy here talking about, AML and what have you. Is AML payments?
No.
So, and it's just at a simple level, you get into conversations like this. It's necessary. It needs to be joined up. Right. So I think there is a hierarchy of needs. If we go back to Laszlo's, view of the world, it is open financing, it's open banking, it's probably open payments. Let's get this bit to work. You to get that bit to work. Hopefully we won't get into this type of scenario quite as badly as SCA, but
Barry, I heard from you for a while.
You're on mute, Barry.
Maybe that's why we haven't heard you for a while. You're still on mute, Barry.
Robert, you're also on mute, I think.
No, Robert is on
I
mute.
just put mine on mute to try and stop Barry. So sorry for everyone listening. Lily or Marta, is there any way you can sort Barry's mute out? And in the meantime, maybe if I can go back to Christos on Christos, is the technology there with this?
Maybe you can just restart. Sorry, just if you can restart, then it might work. Sorry, thank you.
So Christos, could you just
say the question again?
Is there the technology out there to enable this sort of real-time solutions coming through on the KYC? Paul was saying that obviously KYC isn't part of payments. Payments is the movement of the money and the messaging, but in order to avoid money laundering, fraud, etc., obviously you need the compliance in there as well. So I was just going to ask you, is the technology coming through that can do with this real time?
Yeah, I mean, the technology is already there. I mean, you have different technologies that, for example, you have the in-memory databases that they can perform 100 times faster than the relational database on the matter of computing, let's say, complex rules to see if a transaction can pass without an alert. So definitely you have the technologies out there that can perform and calculate in real time, in just milliseconds, what is needed to clear out the transaction. From there on, of course, you have, whatever is needed for the transaction screening as well, which is part of checking to see whether the center, the beneficiary, the entities involved within a transaction are not either politically exposed people or sanction listed people, so that you can clear out that part as well. So yes, I should say that technology has been streamlined to handle this type of compliance request as far as real-time analysis.
Thank you. Barry, can we try again?
Hopefully you can hear me now.
Yes.
Technology, eh? Yeah, I mean, I agree with Christos. I think the technology is there. It's about turning the juggernaut, right, a little bit on some of this stuff, right? Which is, if you think about these types of processes like AML, they've always been post-event batch processes, fire and forget almost, and then we'll work out what to do when we get at the end. And now it's becoming part of the sort of real-time flow. And you look at, especially the big banks, right? It's a journey to move from one to the other, and it's this interim state that's almost the most challenging, which is there's this expectation of that happening, but not necessarily everybody's in the position to make it a reality. And I think we see some of this in some of the and some of the payment schemes. There's this expectation now on instant payments that you're doing a fraud assessment and you're sending that fraud assessment as part of a real-time payment. And it's like, how do you tie that up with the idea of you've got 3 seconds to get it out the door or whatever it is. So I do agree the technology exists, more about actually now implementing and transitioning and getting on that journey across a array of things.
Robert, I want to add something here.
Yeah, please.
I mean, RegTech until now was being reactive. So I mean, you had the regulatory reports in order to to give to the regulators what is needed. I mean, from now on, I think the technology companies such as us are creating solutions that are doing preemptive strikes. So you can assess something that is going to happen before happening, and this is where we need to be focusing on, and not assessing the situation after it happened.
I think that's true. I mean, to the extent that you can preempt issues coming up, it's like having foresight. It's like having ESP. You're preempting it, and I think certainly on the technology side, that will be fantastic.
Yeah, and this is where the machine learning models and the artificial intelligence approach fits in. I mean, into the whole RegTech environment.
And Paul, are you seeing that sort of stuff, Finastra, this sort of the development and growth of AI in this sector?
Yeah, we do. I mean, we opened up the whole of our platform to allow fintechs, banks, anybody to be able to integrate through a series of APIs, FFDC we call it. But so we see this, and we see a lot of FX, AML, KYC guys, fraud guys can say, oh, we've got this thing. And so, we see it as our job to actually enable that, because I think that's the hardest piece.
Yeah.
To the point that I think Barry just made. But I also think there's a bit of a cautious warning a little bit. I mean, I was part of the AI work that the EU kicked off 2 years ago, and it was very worried about how you can show you're working out.
All right.
You actually get into bias without even thinking you got into bias, and then if you can't show how you actually did it, then you're probably not going to be able to use it. If you do show how you can do it, you're enabling a whole bunch of other fintechs to come on board and steal your ideas. So it's a fine balance. But yes, we see a lot of activity in this arena, and it feels like a very techie environment. There's a lot of fast-moving people saying, "Oh, I've got the newest machine learning algorithm." I personally believe most of it is about how it can be integrated easily, and we've had that conversation about. I think Ellie made the conversation about APIs, and I genuinely think it won't be long before, if you can't show you're working out, you're not going to be able to use it, and that will bite a whole bunch of us in our backside.
And is that because AI is a step beyond machine learning? And so machine learning, obviously, you would have set criteria, so you could show the workings, but with AI, it creates its own machine. I don't know.
And that's the pivot point of the argument. If you can show what your rules are and what you have learned, then they could be inspected, and therefore you could make judgments on whether it's biased or not.
Exactly. And eventually, I should add here to, sorry, Paul.
No, please.
Are we also going to talk about quantum technology, or it's going to get a bit too technical for me?
Machine learning, it's those are statistical models that you can show definitely the path that something has taken up from start to end, and then you can retrain your model so that the next time it has a much better accuracy as far as the results goes.
But you need data for that.
I was just going to say, the irony of all this is, I think for me, a lot of it comes down to trust, right? And the irony of it for me is we place more trust in a human who is much more naturally biased than we will in a machine that's following an algorithm. It's you know, I think that's a sort of almost, we're at that point now where the question is being asked, which is, you know, which do we actually trust more? A human who's done 10,000 clicks of a button that day and is tired and is thinking about going to the pub, or you know, an algorithm that's following a predefined path, right? It will be interesting evolution.
Yeah,
I think that's right, Barry.
I think that's where the compliance officer should put more critical thinking on the true positive side of things. So I mean, you need compliance officers to be able to investigate the actual cases that they need their attention and put the critical thinking on that one instead of on losing their time on false positive alerts.
And isn't some of this sort of an analysis post? I mean, surely one of the ways, Paul, that you could check whether the algorithms are biased is by the output, rather than show the working. Surely the output speaks for itself. If it's working, it's working.
Yes, I think that's true. But then how do you know that loan that you gave was the right loan? Because somebody bought it, or because of the ones that you didn't give it to? And you know, while I completely agree with Barry's point, because I fundamentally think that it's more likely to be biased as a person than a rule. But the question then is, if your rules and your API run so fast that you can beat people, it's even more worrying that you need to be able to show why a decision was made. Now, the onus at the moment will be on you to show that, the actual user of it, in this case, somebody like Barry, he'll be implementing it. Show me that this has not been bad.
Yeah.
That's kind of hard to do. And therefore, if you can't show me how this is not done bad, you kind of can't use it. And so that's a tough question. I don't see many answers to that. And this question about can you actually show your working out? Can you actually show what actual decisions were made? Well, no, I can't, because the machine actually learns itself.
Yeah, no, it's a great debate. And I mean, we're coming towards the end of our time, so I do want to thank everyone on the panel, because I think we've had some great discussions. We maybe didn't cover everything we wanted to cover, but I think we could have gone on for hours if we'd done that. There are some questions, by the way, that have been raised, and it'd be good if anyone on the panel could just go and have a look at those questions afterwards and maybe type some answers in to help people out. There's a question about self-sovereign identity, and maybe individuals should hold their own identity. There's a question about the Russian market and how they're banning access to payment platforms. Interesting there, and about virtual banks. So if we could, as a panel afterwards, if you could have a look at those and see if you can answer them a bit, that'd be really helpful for the viewers. But I'd just like to say thank you all for your time. And I think it was a brilliant debate. If you've got one last thing, if we just go around, your thoughts on this whole area and the future in this space of open banking, RegTech, and faster payments or real-time payments. Ellie, first.
All right, very quickly. I'll just mention something I alluded to in a moment, and that's contact-less limits. I think the UK is doing something great right now. By looking at this and analyzing it and increasing the limit, as many other jurisdictions across the world. I just hope the EU is gonna do the same, and then have something that is convenient and that consumers are really liking, especially during the pandemic. Thank you very much.
Thanks, Ellie. We'll be following up on contactless in the next panel as well, so I'll take that point on. Thank you. Gus.
Well, I could say many things. One thing is we also need to think about not just the European Payments Initiative. We also believe that there's a very strong case for a pan-European identity, or what Dave Birch would call a pan-European financial passport. We need to solve that one too, I guess. And we are learning from PSD2 to do it a bit different than what's happening in the UK, not an open banking implementation entity. We believe more in a market-led solution. So we're working pretty hard on the SEPA API access scheme, starting with PSD2, then premium service, then beyond PSD2 payments, then beyond payments, beyond finance, then for open data. We hope to develop a scheme framework that would fit that bill. But still, we would need to crack the business model nut, and also the GDPR nut.
Yeah. Well, we can maybe add COVID to your passport idea. Your vaccine passport.
Yep, that's a good idea. Yeah. Combine the two.
Exactly. Barry, you're on mute.
Yeah, I mean, thoughts from me. I think the exciting thing about it is all the different things we've talked about, which have been siloed to date, are starting to converge, and that's where this really gets interesting when you start to think about, open banking with real-time payments, with with data flows and how we manage that with RTP. It's when you start to bring all these sort of things together, that's where really you unleash the value. And I think we're starting to see, people tackling some of these hard problems. They're not going to be solved overnight, but at least the appetite is there. And I think we'll see more of that over the coming years, which will make it a very exciting time for payments.
Thanks, Barry. Paul.
Yeah, look, I think that the issue at hand is very different to anything that we've ever done before. Everything we've done to date has all been analog. We're now moving to a digital world, and that digital world. So we talk about faster payments and ISO and all this actual thing. Actually, we shouldn't think about it like that. We should think about it as the start of digital payments, and that's a new world and a new paradigm. And the issue behind that is many of the things we've actually discussed, but at the core of it all is culture. And how do we change our culture to be able to get to where that digital change is going to be? That's much harder than talking about APIs to APIs.
Yeah, true. Thanks, Paul. And Christos, I'm going to ask you to basically kick off your presentation on yours. So I'll thank the rest of the panel, and then Lily will do her stuff and get your slides up, I'm sure. But I think that was a great panel by everyone. Hopefully the audience got some good feedback from that. So thank you, Ellie. Thank you, Gus. Thank you, Paul. And thank you, Barry. And Christos, over to you. Thank you.
Thank you. Thanks. All right. All right, excellent. Now, I will take you through very quickly on what we offer and our approach on how you can approach this complicated compliance environment that we are all working on. So let me just share my presentation with you. So as a company, we have been trusted by more than 350 clients from the financial industry. We have 7 banks, 50 investment firms, and 25 EMIs and PSPs. Now, the problem areas that we concentrate include the know your clients and client acceptance. So that is either for the ones that are onboarding individuals or legal entities, there is a complex process of accepting or rejecting a client. So we are trying here to, on a frictionless way, to accommodate that type of problem that you might have. Also, as I mentioned previously on the panel, monitoring of transactions, either on a pre-execution mode or on post-execution mode, is very critical for EMIs and PSPs. So this is another problem area that you are probably having in your line of business. Of course, remotely identifying your clients That is another issue, depending on which regulator you need to comply with. And in Europe right now, based on the AML5 and based on the ADAS directive, client remote onboarding is allowed in most of the countries that they have accepted, and they have and the law is in line with AML5 and the ADAS directive. And finally, definitely risk management and risk assessment on different levels. This is another area that you are having problems, either whether you are doing it manually or if you are doing it through an automatic way. So here is where we bring our solutions that could handle those problems through a client lifecycle management that you can handle the onboarding and KYC. We have a workflow engine where we orchestrate the compliance process, as well as a real-time transaction monitoring and a post-execution transaction monitoring and screening. We have several API services needed for digital identity verification. And finally, the part that everyone is interested is related to PEP sanctions and adverse media. So this is just a quick flow of your info and how we handle all the tasks, all the daily tasks needed, either if you have an onboarding process or how you handle within the compliance solution, which is RegTech in this case, all the steps needed to evaluate and create the risk rating based on several factors of the client. From there on, very important is how you do your ongoing monitoring, your transaction monitoring, your transaction screening, and all the different type of flows within your company. Because we don't have too much time to go through the whole system, here I would say that RegTech can provide a consolidated risk assessment, and I will go into depth later on. We have a single compliance profile view of the client. It's very important to me, and I've seen several implementations and deployments that you differentiate your CRM or your core banking solution from the compliance solution, but at the same time to be tightly integrated between them. Now, definitely something that you have to have in mind is the three types of risk rating. The risk rating of the profile of the client, which is driven by a risk-based approach. The transactional behavior alert risk rating, which is based on the risk rating of the rules and the machine learning itself, and how it's impacted by the suspicion level, how many cases you have open. So you have different parameters that affect the transactional behavior risk rating of the client. And from there on, you have a unified risk rating, a workflow engine, and definitely a reporting engine that can help you in a seamless way to give you the analysis needed. Now, as far as the consolidated risk assessment, definitely there are many factors that are affecting the risk rating of the clients, starting from the identification of the clients, whether you got different data from other external data sources, and even whatever is needed from the questionnaire point of view and the weight factor given on every parameter. Now, what I meant before by a single compliance profile view, this is the dream of a compliance officer, to be able to see all the details related to the compliance profile of the client on a single view, starting from the history of the risk evaluations, whatever mitigation actions are needed from the compliance point of view, whether the documents, the official identity documentations or the utility bills have been verified from this single source, the PEP sanction list, ongoing monitoring, the onboarding assessment, whatever is needed as far as the fraud scoring goes, KYC levels, of course, transaction monitoring and screening, regulatory reporting, and the data preparation of it, where from there on we send it to partners to create the reports needed, and then case management, which is a vital part of what compliance officers should be doing. Now, I'm going to show you through different screenshots of the solution itself. What I'm showing to you right now is a portal that you can create through our platform in just a matter of days. So we have, for example, fund management companies that they have been sending to clients of theirs like a 70-page PDF document. That one can be replicated very easily through the portal. So the client, either a corporate entity or an individual, can go here, they can fill up whatever questions needed, they can do the video KYC interview, they can upload documents, and then when everything is ready, they can click submit. We verify everything, we validate everything before it's sent back to the backend. Now, the backend includes whatever I mentioned before. They can show you clearly a legal entity structure and how it impacts the full risk assessment. From there on, this is the picture that the compliance officers should see. An automatic AML screening, an automatic evaluation, risk evaluation, the documents to be verified automatically, identity verification through external data sources automatically. So in a nutshell, from the time the client clicks the submit button to be able to seamlessly approve or mitigate the risk of the client from there on and push it to a compliance officer to be reviewed. Now, as I said, a vital part of the full risk assessment is the evaluation. Of course, case management and analysis of every case, either whether it's coming from a live transaction or through screening. And then what the panelists said before, everything is driven by REST APIs. So this is a very important part of tightly integrating whatever core banking solution you have, whatever CRM you have, in a seamless way. Thank you for your attention. Thank you so much. If you have any questions, I would be glad to answer them. Thank you.
Thank you so much, Christo. That was really great, really informative. We will be circulating an email to our participants today with a few presentation slides from today. So I will, thank you. So I will invite Robert back to the stage and we will begin our next session. Thank you, Christo. Thank you so much. And thank you to Spiral for sponsoring our event today. So we're ready to start and looking forward to the next session. Nick, how are you? Welcome.
I'm good, thank you. Great to see you all.
Good to see you too. Good to see you all. We're ready for a great next session. Sarah, hi. How are you?
Lily, how are you doing? I'm great, thank you.
Good, good. Thanks for hanging on. Sorry, we ran a bit over time, but I'm handing right over to Robert. Thank you. Have a great session.
Thank you, Lily. And just to remind everyone that's on here, we have the poll. The second poll has gone up, so if everyone could put any answers in they can, that would be really helpful for me to be able to give some responses at the end. But without more ado, I would love to welcome our two panelists on this section. And I think, again, it follows on well from the last section. In fact, the last section had the segue at the very end where we were discussing contactless, and I think that's a key area we're covering here. So without more ado, maybe Sarah, you could just introduce yourself, and Nick, start with Sarah.
Yeah, Robert, great to be here. So Sarah Savage is my name, and I lead the International Growth and Expansion Agenda here at JP Morgan Merchant Services. Because prior to my move to JP Morgan last year, I was the Chief Revenue Officer at TransferMate Global Payments, responsible for the creation and execution of go-to-market agenda along with driving scaled growth models. And for the last 25 years, I've been part of or led multiple corporate, enterprise and institutional sales agendas for Barclays, Royal Bank of Scotland, and most recently, First Data Corporation, now Serve, where for 10 years my teams would have supported many Fortune 500 companies, fintech unicorns and disruptors. So delighted to be here, Robert. Many thanks.
Great to have you, Sarah. Nick, maybe you can give us a little bit of your background, please.
Sure. Hi, everyone. Great to be back here at a QUBE event and discussing all of these important issues. My name's Nick Kerrigan. I'm Head of Innovation Execution at Swift. That basically means I'm responsible for making sure that innovation happens in our company and together collaboratively with the whole financial community. Like Sarah, I've got many years experience in payments and banking, over 20 in fact. I was unfortunately described on a webinar recently as a payments industry veteran, which slightly appalled me because I didn't think I was really that old. But I have been around this space quite a long time, particularly with a career at Barclays, where I was involved in strategy, digital payments, and lastly, the innovation agenda.
Thank you both. And I'm going to kick off on the segue from the previous one and dive straight in before I think the key factors driving the future we'll finish off with. But maybe we could dive straight into the whole contactless question. I mean, I think in the UK, we've just said that we're going to increase it to £100 now. Sarah, I'd love your views on contactless and where it's going and what's driving this innovation.
Yeah, so this is a really good one, right, Robert, and timely given obviously the increase by the UK government. And it's really good news for us and me as a consumer. And I guess I've used my phone over the last number of months and years as COVID has really taken a kind of a shift and change to the way that I spend and the way that I purchase online. So that component for me probably hasn't changed too much because I still use my phone and I'm actually uncapped in terms of the amount that I can use. But I think for the tap and go community, and if I look at the UK finance data, around 2/3 of the debit cards last year were contactless, which I think COVID has really shifted the way that people spend. The UK Finance found, I think 64% of debit cards were made contactless compared to 62% earlier on in the year. And like I say, when I look at the tap and go, when I look at the efficiency around people spending that way, it's great as a consumer. But I would imagine that following the announcement yesterday, there are a number of risk and fraud teams, issuers and acquirers a little bit nervous as they contemplate the impact that this increase is going to have. So secure authentication still takes away some of those risks. But I guess as the UK government changed the legislation, as the increase of the limit, I would imagine that fraudsters are rubbing their hands together, thinking how they can potentially take advantage of the increased limit and how they can potentially raise more costs and drive that. So when I look at the impact on the industry, it's going to be quite significant. I think we're still working out what that will be, but for consumers, it's certainly a real positive.
I mean, my understanding was that on the last increase, there was hardly any increase in the fraud numbers. Nick, are you aware of that?
I'm not close to the detail of the most recent increase, but certainly, previous increases had not resulted in a material increase in the fraud numbers. So, I mean, obviously, when you do a public announcement like this, it does prompt people to sort of, encourage them to have a look. But I think, as Sarah also would well know, if you looked at contactless fraud alongside other forms of fraud in the cards world, such as online and e-commerce kind of fraud levels, contactless would be much lower. I think the other thing that's interesting, I mean, for me, and this limit increase yesterday kind of signals, is that contactless has definitely been propelled by the COVID crisis. It was a trend that was already happening. You saw that in the UK finance data, but it's really been propelled by COVID because, people didn't want to touch physical cash, and the, almost halving of the use of physical cash in a year kind of indicates that. I do think, though, that almost like contactless is maybe becoming a more of a sort of transitional period, because I think we're moving from contactless to almost like sort of towards a kind of contact-free type of world.
What do you mean by contact-free?
Well, I think if you look at the way that our behaviors as people have changed through this crisis, I think one of the things that we're experiencing is that, you know, we are now displaying a reluctance to get kind of physically close to people in case that there's a risk of infection. And so despite the fact that I've always kind of been an NFC and advocate in this space, I do see you know, cases where other solutions such as QR are now taking off in situations where the consumer wants to avoid close contact with other people. So, you know, you see cafes encouraging consumers to scan QR codes and order on their phone. Obviously, Starbucks has been doing that with barcodes for some years. And, you know, just yesterday, Amazon opened its first Amazon Go in the UK.
For great.
And it's a just walk out experience. There's no interaction between the consumer and another person. And so I think there's you know there's a you know the likelihood, not only from a COVID perspective but from a convenience perspective, that will take off. As you know, Robert, my team actually piloted this type of technology back in 2017, and we were a bit ahead of our time, but it is now taking off. And then use the fact that you see Amazon offering that technology to other retailers, I think, is an indicator of that.
Yeah, and just to add to this, you know, people want to get in and out quick. They want to limit the cash passing between hands. They want to avoid touching any surfaces and maintain that social distance. So I think what's happening for us generally around the contactless piece is really positive from the consumer's point of view. And like you say, Nick, we're still yet to work out the impact on fraud, but I guess raising that to this new limit will have an impact, I guess, as I say. It will make the issuers and the acquirers just a little bit nervous in terms of what will that mean for them, because the technology itself, hackers have been quite successful in recent times, making fake scanners, using skimmers as well, which is an old technique. But if the hacker gets hold of the information, he can create those clone cards. I think there's still probably a little bit of research to be done in terms of what that impact will be for merchants, for issuers and acquirers too.
And Sarah, the point that Nick was making there on the move to contact-free and the sort of Amazon-style shops, is that something you see coming even more in the future? You see that like?
It has to be, Robert. It has to be. And I think if I look at the trends, the way that COVID has changed things, and let's put this into perspective, right? 12 months ago, the world was a very, very different place. And I think how companies evolve, and you reference Amazon there as an example, how companies that are proficient and really strong in the e-commerce space, how they translate that into the real bricks and mortar world is fundamental. And yet we're seeing a huge shift in terms of that at the moment.
Yeah, I absolutely agree with that, Sarah. If I could, Robert, because there's actually what you have are companies that have grown up in a purely digital environment that are now really coming into the physical world, and actually you know, and Paul actually in the previous panel alluded to this, right? The biggest transformation really we're undergoing is the rapid digitization of our lives and the economy as a result. And so actually that means that money and payments need to become fully digital as well. And we're now seeing that digitization accelerating, propelled by the COVID crisis. But as businesses, we need to support that. And it's the same strategy that we're on at Swift to actually support, you know, payments in that digital economy.
And I think this segues well into the next one. I mean, because how COVID has boosted the popularity of buy now, pay later options, and again that kind of fits in on the sort of contactless and the sort of contact-free more, I would think, payments. Because how do you build in the option to buy now, pay later when people are just walking out of Amazon with their fruit in their hand?
Yeah, so we've seen a huge boost in terms of buy now, pay later across Europe. Although I guess if I look back over the last number of years, it kind of became really popular in Australia. First and foremost, you know, the likes of Afterpay created that environment and that ecosystem so that perhaps maybe the underserved, or those that didn't want to take on credit cards, perhaps maybe those that were trying to manage their own cash flow between paydays, they were able to buy now and as it suggests, pay later. And that model and that solution in place really doesn't necessarily appeal to everybody, but for those that perhaps maybe that younger demographic, or perhaps maybe that demographic where they would rather buy now, or perhaps maybe in the previous years would have put something onto credit, either with a catalogue firm, or perhaps maybe with a bank, or perhaps maybe on a credit card, we're steering away from that. And these methods of payment now, the likes of Afterpay, ClearPay, second Klarna, that's really prevalent here in Europe, really has taken the world by storm. And if I look at some of the partnerships that these payment methods have in place with top brands, the like Marks and Spencer's, the like of ASOS, they're opening up, and they have to open up new payment types and payment methods to encourage people to spend more when perhaps maybe cash flow doesn't allow them to do that right now.
So, Nick, do you have any thoughts on the NPL stuff, or should we?
I mean, it's clearly been a very vast growth area. I think Sarah captured it very well just then. It speaks to this trend that around digitization, which is about flexibility and convenience, right? So the ability to get what I want, but be able to flexibly manage the payment of that. I mean, obviously, it will raise other questions about, affordability and debt levels and all of those kind of things. But I'm probably not best placed to address that.
Yeah, and that's a really good point, right, Nick? Because I think there's a shift and change as well. The FCA are looking at regulating the sector. So historically, buy now, pay later hadn't been regulated in the market because it wasn't necessarily a consumer credit product. Okay, because they made small payments, there were limits attached to it, there weren't excessive fees, and the way that they collected those payments didn't necessarily mean that they fell into that particular bucket around the consumer credit license. So there have been changes, and with the adoption from more people to use this particular payment method, the FCA are having to look at it to make sure that, one, there is consistency across the multiple different providers in the market at the moment, but more importantly, to make sure that consumers are always being treated fairly. You've got to consider as well the costs associated. So obviously, if I look at Klarna as a model, Klarna will charge the merchant the money to collect that particular payment method. So I can use ASOS as an example. I can purchase from ASOS, the jacket costs me £150. The merchant gets the £150 up front, whereas me as a consumer, I pay that back over a 3 or a 4 month period of time. So somebody has to pay Klarna, obviously, and that is the merchant as well. So there's two aspects to me with this particular payment type. One is the regulation, making sure that consumers are treated fairly at every single point. And then secondly, at the cost of that, the merchant adopting that particular payment method as well, making sure that it's still cost effective.
I got 3 quick questions that I'll ask you both. Just a quick answer, because I think they are. Do you think cash payments will increase again once the vaccine's rolled out? Sarah?
Sorry, Robert, I lost you there a little bit.
Do you think cash payments will increase again once the vaccine has been rolled out? Do you think this is just a blip?
Yeah, so I'm going to use my parents as an example. Both in their 70s, they've started using contactless payments more so now. So I think what COVID has done is it's changed the way that people view contactless payments. They physically don't want to touch cash. And even myself, I find when I'm handed a €10 note, I look at it and I wash my hands afterwards. So I think it's probably more of a cultural thing now. Do we want to touch more payments of cash, or do we want to just use the easy mechanisms that we've become familiar with?
Yeah, absolutely, Sarah. Fully agree. I think you've seen a behavioural change, and always that's what you look for in payments innovation. You get early adopters, and then is that sort of S-curve shift of real mass adoption and behavioural change. And I think that's absolutely what we're seeing. So I don't see a material move back after the crisis.
And then in relation to the Amazon one, we're saying how far are we removed? How far are we from removing the card altogether and the use of biometrics, face recognition, or other technologies, or is this just science fiction?
Well, I think that's already being used in a lot of ways. How do many of us open up our iPhones? It's through a facial recognition, and there's a lot of other services that place reliance on that. So often you open up your banking app and it asks, does Face ID on that? Is using that the phone's service. So I think my answer would be it's happening now.
And Sarah, you agree?
100%. Yeah, absolutely, 100%.
And the third question was, is contactless RFID sufficiently protected from fraud, or is this still an ongoing security issue?
I think, Robert, I made my feelings clear on that, I guess, coming from the acquiring industry. So yeah, I do think it's a challenge. I do think it's something that we will have to watch with interest as the limit increases and people start to use it a little bit more.
That's great. So Nick, I'm just going to move on to the sort of cross-border payments nature, being that you're from Swift. It'd be mad not to cover this and where the future is going. Can you talk about GPI and some of the things that are happening in the sort of ramping up of this cross-border space?
Yeah, and we're in a really exciting space, and that's why it was a pleasure to join Swift a little over 7 months ago now. We're in the midst of a transformation in cross-border payments. We're moving from that traditional cross-border banking model, which has existed for 40 odd years, into a newer world with GPI. And since GPI has launched, they've seen a real big uptake. There are now sort of over 1,200 live GPI members, over 2,000 live country corridors, somewhere in the region of $350 billion of payments are sent as GPI every day now. And approximately 40% of those are credited to end beneficiaries in 5 minutes. Right,
and why is that? I mean, nothing has changed in the way in which the messaging and the money is being moved. But just because you've got someone watching where it's going, that sped it up. Is that right?
Yes. I mean, it's all about the SLAs that sit around GPI and the service commitments that the members make on a GPI payment. And then they're also with the services that are now enhancing GPI. So, with GPI and the tracker, you can track payments end to end, just like you can track your Amazon parcel. And that's tremendous, because in this kind of chain of payments that you get in a kind of cross-border correspondent sense, knowing where the payment is at any one time is incredibly important for customers. And then there's also a linking up that's been done. So you might have seen that Lloyd's recently went live with GPI Instant, so linking the international and domestic legs. So you make an international payment into Lloyd's, it can be domestically credited instantly. And there's also, in the previous panel, people were talking about newer services that are being done domestically. So, for example, in the UK, you might have experienced recently confirmation of payee. So, you put in somebody else's details and it validates that that's a real person. That service, we call it pre-validation, is coming to GPI as well, so that that the person you're sending to has a validated account. But it isn't stopping there. I mean, the Swift's new strategy is absolutely about delivering instant and frictionless account-to-account payments globally. And that's why we're building a state-of-the-art platform with richer data that will actually manage the transaction end-to-end and provide a huge number of benefits to the banks, that the members of Swift, the corporates that are connected to Swift, and all of the end businesses and consumers that use the Swift network. So, yeah, it's a very exciting time in cross-border payments, and we want to make cross-border payments as instant and frictionless as domestic payments are. And so, being in the innovation space in that area, there's so much opportunity.
That's great. And Sarah, what are your thoughts on the sort of global expansion of merchant acquiring and how that fits into the whole cross-border access on this?
Yeah, so I guess, if I look at the industry, there are a number of different areas that are really shaping the trends, right? It's about making sure that merchants, they act globally, right, but they still feel local. So it's about making sure that they've got the right payment methods there in place for their clients. Okay, so again, look at me as a consumer. If a merchant doesn't offer me the payment method I prefer to use, then historically I would have gone and found somebody that will, right? So those payment trends, making sure that merchants have all of the payment methods applicable. I think there's around over 300 payment methods now globally, which is crazy, because if I look back over the last number of years, they were always very domestic, local payment methods, whereas now the global perspective really has come into Nick's point. The second part really is around creating that ecosystem, okay? And when I talk around the ecosystem, it's more around an environment that connects my personalization of me as a consumer. It connects perhaps maybe some of the different business models that amplify loyalty for the platform that I use, to make sure that if I'm a regular customer of a particular merchant, that they know that they can respect that, but perhaps maybe incentivize it to encourage me to spend more. And if I look at some of the clients that we're working with across the globe, that ecosystem is fundamental to them, to make sure that they've got real-time processing, they've got all the payment types that they need, but they can optimize every single payment as well to make sure that it's processed efficiently, back to Nick's point.
And you talk about JP Morgan being global, but did I not read something about you becoming intergalactic recently?
Oh, Robert. Yeah. So we've recently tested blockchain payments between satellites orbiting the Earth, right? And I guess the rationale behind that is that we wanted to prove that digital services could use technology behind virtual currencies for transactions, right? So to run the space experiment, we don't have our own satellites, so we certainly didn't use those though, but our blockchain team worked with other companies to run and process payments across the satellite. So it was more to test to see whether it could be possible to create sort of a marketplace environment where satellites send each other data in exchange for payments, as more of private companies launch their own devices into space as well. But I guess going to Nick's point made a little bit earlier, we see this already now, right? So back on Earth, the examples of Internet of Things and payments could be a reality a lot sooner. So if you look at smart fridge ordering, paying for milk on an e-commerce site, self-driving cars and paying for gas. So we've already seen that technology in our homes at the moment. So the likes of Amazon Echo, Google Home. So I guess banks want to be ready to process payment with these smart devices to make sure that it is that smooth and seamless process as well. So yeah, kind of processing payments, definitely out of this world.
So more science fiction. The science fiction is the science reality. Do you agree, Nick?
Yeah, I mean, I think it was a great experiment that Sarah did. As an innovator, I always love to see the experiments happening. And I think that the thing that I take away and resonate is about the collaboration here and the ability to partner effectively between different services in order to build an experience. And that's what we're all about too, is collaborative innovation. And being able to bring the whole financial community together to solve some of the biggest challenges that we have across financial services. So yeah, that collaborative element and the sort of putting together different service partners, big and small, really resonated with me.
So we are having to run out. We've a little bit overrun time, but we started late, so that's great. Just a final summing up, maybe from you, Sarah, on what's going on in the future. Where do you see things going?
Yeah, so I think it has to be about personalization for me. Okay, so personalization for the consumer, but also personalization for the merchants and the businesses as well, making sure that they've got that ecosystem that can recognize and acknowledge the clients that they have, make sure that that payment experience is seamless and very, very frictionless. Smooth as well is fundamental, but making sure that every transaction, whether it's a card payment transaction, whether it's a cross-border transaction, whether it's a B2B transaction, everything has to be processed as optimized as possible. Those would be the key messages. And for the partners that are out there, whether it's in the acquiring space, whether it's in the banking side of things, make sure that you have the partners that can truly help you optimize and make sure that you can link together that ecosystem, because ultimately that's what the consumers are looking for.
That's great.
Yes, thank you. I mean, fully agree with what Sarah said. But for me, it's about digitization and this whole transformation journey that we're on. The world is changing very fast. and the developments we see happening in cloud, in AI, in things that sound more technical like payment standards, but that will open up much richer data and therefore enable the new creation of services. All of these things, I think, will transform financial services. And I think, you know, the world will look very different in 10 years' time. The expectations will be so much higher. Financial services will be embedded inside other services. Payments will be easier, more accessible, more inclusive. So I think it's an exciting time, and I think it's an exciting time that the community needs to come together and collaborate to make this future a reality.
Well, thank you very much, Nick, and thank you very much, Sarah. And now I'm going to pass back over to Lily, who's going to introduce our speaker, Keith Jordan from MasterCard. Thank you.
Thanks, everyone.
That was an excellent panel. Thank you so much for that. Robert, we're welcoming Keith. Keith is right here, right on time. Keith, how are you?
How are you? Good morning.
Good morning. Good morning. How is everything?
All good. All fantastic. Thank you so much. Thank you so much. Good morning.
We're racing towards reality, Keith. So we're really excited to hear about your presentation. So we're going to leave you to it. Thank you so much for that.
Thank you so much. And following on from the panel previously there, a lovely segue into what I'm going to kind of take us through. You know, blockchain on satellites. Absolutely fascinating to hear that. So look, good morning, everyone from Dublin. It's a great pleasure to be here on this live webinar. And I want to say a big thank you to our colleagues here in QUBE for inviting me to speak to such a wonderful audience. Just to give you some context, at MasterCard, I lead the global innovation teams in Labs as a Service. Labs as a Service are the external corporate innovation group that deliver cutting-edge technology solutions to our clients all around the world. And essentially what we do is we fix big problems using technology across multiple verticals and channels. And this gives us these unique insights into digital first trends where we can spot opportunities to you know, look at financial service disruption and to create new products, services and platforms. So today I'm going to take you on an expansive dive into our technology future and hopefully show you how the world is going to fundamentally change, demonstrate the types of experience that we will see in this next evolution of digital and social transformation, and highlight all the boundless opportunities that are going to be created in this next decade of radical transformation. So to kick off here, we're standing on the precipice of massive change. The trends that have driven digital adoption and usage during the pandemic has shown us that technology is now the most important driver of economic growth and stability. If companies and organizations are not moving now into a digital first adoption, their futures could likely be decided by further economic shocks or new agile digital competitors entering into their market space. We're actually living through a communication revolution that's been accelerated by the pandemic. Communication experiences native for 2030 are actually being built today. So in a 12-18 month period around the pandemic, technology has moved on more than 10 years. So if we look today coming out of the actual pandemic, you know, 1 year in reality is, or the physical world is 10 years in the technology world. So that the rate of change is escalating so quickly. I expect that we'll use the same products for both personal and work lives as companies adopt hybrid and in-person remote cultures, a big change we're going to see. Consumer and enterprise distinction may disappear because we'll be using or co-using these tools. Platforms will transition to subscription ticketing, in-app purchases, and they'll start moving away from the ad-driven models that we see or that we were seeing pre the pandemic. Because people are now happy to pay for content and connection as long as they know how their data is being used transparently and the incentives around that are aligned. So the world is going to change more in the next 25 years than it has in the previous 500. And as we move into this new decade in the post-pandemic world, we're going to experience an explosion of technology and services that are going to impact on every industry, every channel, and every vertical. The movement beyond digital transformation is underway, And the next wave of technology companies and platforms are going to link the digital and the physical worlds together. So as digital bleeds into the physical world, new methods of consumer interactions must be imagined. However, this next technology race will not only just be for customer attention, it's actually going to be for reality itself. So in our near future, we're going to interact with brands and companies in a heads-up world. We're going to use voice first, location-based, AI-enabled services built on advanced visual user interfaces offered at the customer's time of need. So this next decade is going to bring radical disruption. The world is going to look entirely different by the time we get to 2030. And we're about to embark on a remarkable journey into the new roaring 20s, where every area of our lives is going to be impacted by the next wave of technologies. So to all of our guests watching here, welcome to the race for reality. What I'm going to take us through is 3 signals from the future. So we continuously scan to see what's going on in the greater world. And we try and see and spot and navigate these trends and see, can we basically bring them back into reality and see basically how we can land this plane. So I'm going to touch off, as I said, 3 signals from the future. The first signal that we're going to get into is digital humans. So AI might be the defining technology of our time, but the idea of forming meaningful relationships with artificial beings has been compelling, writers and deep thinkers, for centuries, from Pinocchio right up to Blade Runner in the 80s. But what we're going to see as a massive trend here is that emotional connection is going to utterly transform and change the digital world. And that Gartner stat is quite stunning, that in the next 10 years, only 15% of interactions customers are going to have with businesses will actually be with a human. So writers, throughout history have been exploring these narratives around, virtual companions, AI, and even the idea of bringing, dead people, back to life. And if you can recall an episode of Black Mirror, where it revolved around a woman training an AI using her dead partner's text messages to replicate, his personality and tone. And that looks, quite science fiction. But in 2021, Microsoft researchers have patented a similar concept where images, voice, data, social media posts, and electronic messages could be used to train and create chatbots that would correspond to a past or present entity. So basically, we could be potentially, reliving our lives in the future as AI services. That's a completely crazy concept, but nobody wants to see a future normal where swathes of people choose virtual relationships over ones obviously with real humans. But what we're looking at here, and we should obviously consider more optimistic scenarios, and we need to think about areas where these virtual companions and these digital humans are going to be a really powerful force for good. So healthcare, for example. So virtual solutions are cheaper, they're infinitely scalable, and they're always available 24/7, which makes them very accessible to a very, very wide audience and potentially more effective. And if we look at, say, mental health, so one of the early movers in this space was Wobot, and that was developed at Stanford, and it's a cognitive behavioral therapy chatbot. And during the pandemic, the demand for the services for this chatbot absolutely exploded. And they were exchanging nearly 5 million messages every single week with people using this automated system. And this is far beyond the capacity of traditional human-powered therapy systems. So we can see where this power and where this scale, can actually absolutely explode. But surprisingly, a global study into the AI workplace found that, less than 1 in 5 people would prefer talking with humans over robots when it comes to their mental health. 4 in 5 people were actually open to having robotic, therapists and therapy. So we've seen companies focus on creating virtual companions as well, designed to help skills with kids and helping older people to stick with medical regimes and stay connected with future friends and family. So this wave is happening. It's coming very quickly. But if we look at the autonomy of successful communication here, it's not just about words, it's emotional connection, it's facial expressions, it's tone of voice. And these technologies have been cracked already today using machine learning, using computer vision, low latency cloud processing. This is already happening, today. And to give you a real example of actually what is happening today, I just want to talk around Show Ice. So in China, they've deployed this chatbot. Microsoft deployed this chatbot 4 years ago. They've already got 660 million users interacting, with this chatbot. And sometimes the line between fact and fantasy does blur, and she gets love letters, she gets gifts. She's got a massive fan base. And her popularity is such that she ranks amongst China's most admired celebrities. And her talents have no bounds. You know, she's a poet, she's a painter, she's a TV presenter, a news pundit, and her capabilities are extending. But the secret of her success was that she's learning with increasing success to relate and interact with humans through nuanced social skills, and more importantly, the emotions. So this is already taking place. 600 million people are already interacting with this. The second signal I'm going to jump into here is EdTech and the radical transformation of education. This is going to be a massive trend that we're going to see. So as our tech-fueled society is approaching and speeding up, you know, one thing is certain: more people want to study and reskill to get ahead. But the falling cost of technology mean it's easier and cheaper and more necessary actually to be educated than before. Education is going to become globalized and democratized, and the UNESCO sustainability goal is urging all members to commit up to 6% of their GDP towards education by 2030, because they see this as being an ongoing concern that they need to affect. But most significantly, we're not just talking school children here. So from university degrees to further education to workplace training and upskilling, adult education and training is going to be a massive business over the next decade. And traditionally, the reason behind this is, mostly for most of us, our formal education, whether school, college, or university, ends when we start a job. But now we're witnessing the advent of lifelong learning, where workers will need to update what they know, more often. So to combat this, educational experts talk of need for, this consistent conveyor belt of knowledge upgrades, and critically focus on these 4 C's. So the critical thinking, communication, collaboration, and creativity, because this is going to become the primary intellectual toolkit for tomorrow's workforce. The 4 C's. So really kind of pay close attention to the to the 4 C's. But not only that, educational models are also going to evolve. So currently, educational establishments, still retain the shape of a bygone area. They're very analog. So teachers, lecturers, instructors are imparting information to rows of students, basically sitting there passively. But the future is not going to be about passive spoon-fed information, because in the modern area, we have access to information on tap, and we can serve ourselves. And there's an estimated, 30 billion web pages in existence. There's 500 hours of video uploaded to YouTube every minute. So instead, the focus will be on teaching how to work with that information. So a teacher's role is going to change from being a broadcaster to a guide. They're going to spend more time working with students to consolidate their learning rather than directing knowledge directly to them. And if this shift really takes place, it means that traditional educational practices are going to be turned on their head. Students are going to direct their own learning. They're going to build their own knowledge before heading to a classroom to collaborate and interact with students. And students are going to be encouraged to be self-motivated, and they're going to view themselves as nearly mini startups. And Reid Hoffman from LinkedIn has been doing a lot of work, in that space. But to kind of summarize here, in the next decade, the smartest companies are going to train and teach employees the skills that they've never learned before. I want to just touch off just a couple of interesting case studies here around virtual reality and Walmart, because there's a quiet revolution taking place in Walmart. So there's a massive VR advantage here, and it's redefining soft skills training. So the digital transformation of learning is already underway. And some of the most exciting innovations are in extended reality, and that's the umbrella term for augmented, mixed, and virtual reality. But it offers new opportunities for these immersive experiences. And since 2017, Walmart has been using virtual reality to train employees. And why are they doing this? Because it allows them to artificially create scenarios that they can't create on a live sales floor in a very safe environment where they can learn. Walmart have found that VR works especially well when rolling out new technology and processes, and they've trained over 1 million employees already. They've moved completely away from e-learning. But VR learners are now 4 times more faster to train than in traditional classrooms. They're nearly 300% more confident to apply the skills they've learned after the training. They're nearly 4 times more emotionally connected, and they're 4 times more focused than e-learners. So it's a massive up increase, excuse me, in soft skill training. If you look at BMW, for example, so BMW are basically doing all of their employee training in safety in virtual reality environments before they go anywhere near the actual floor. So the immersive learning is allowing BMW to scale up, feedback teaching. Trainees can give immediate feedback. And they built what they've called this virtual workstation when they were ramping up to produce the new 3 Series in Munich. So it was entirely planned on a digital twin in virtual reality. And a key example was the cockpit pre-assembly, because that was really complicated. So with the development work already in progress, the existing cockpit assembly line could continue without interruption or disruption, because they were running digital twins in virtual reality. So it's fascinating that this is already taking place, already happening. The third signal I'm going to jump into here is augmented worlds and the metaverse. There's a massive sea change coming, and it's going to be driven by augmented reality. So coming after the industrial age, the space age, and the digital age, we are now going to start jumping into what we're
I believe we've lost Keith momentarily. I hope that we'll get him back.
Can you see me there? I think I'm back. Okay. So we're going to be looking at, as I said, the augmented reality as a disruption tsunami, because it's going to change everything. It's going to touch off experience design, artificial intelligence, IoT, and synthetic media. But the key thing to think about here is we're moving from a heads down world into a heads up world. So we're going to move from looking at screens and looking at physical devices to looking into a heads up world and looking into the future. I'm just seeing a note coming in. Can people hear me here?
Yes, sorry, Keith. There was a momentary disruption in the technology, but we can do just fine. Sorry, please continue. Thank you so much.
You can still hear. Wonderful. Sorry, guys. Thank you so much. Thank you so much. The next computing platform that we're looking at is going to be smart glasses. It's going to be small form factor with wide field of view smart glasses that have LiDAR, that have spatial mapping built in. This is the next paradigm shift in computing. By 2030, we will no longer be using smartphones. We may no longer be using fixed devices. Smart glasses are going to utterly transform everything in a very, very, very quick space of time. When we look at the breakdown of what these industries are actually going to generate, virtual reality is getting all the press at the moment because it's enterprise led, it's starting to get scale. But when these marketplaces settle down, we're looking at a 150 billion marketplace opportunity in the next 3 years. But virtual reality is going to be 30 billion of that market base, and AR is going to be 120 billion. So it's going to be a massive increase there. The adoption phases we're looking at around this technology will start essentially this year. Apple are going to be bringing out their new headsets. Facebook will be releasing their headset with Luxottica. So we're going to start seeing a massive movement and a big adoption towards these smart glasses. So we're expecting around 10 million shipments this year. It'll ramp in the next 2 years to 100 million shipments. And then by the end of the decade, or towards the end of the decade, we will be looking at smart glasses displacing smartphones and potentially up to 8 billion shipments of these devices. I want to talk about the experiences that we're going to see here, and this is where the opportunities reside for enterprises. Boundless opportunities to create amazing experiences. Experiences are going to become embedded. They're going to become far more engaging. They're going to become very visual. If you think of putting on your smart glasses and you're into mountain biking, for example, you can go up to a mountain or go up to a track that you basically use, and then you can start racing against your friends, for example. So you could do the run first. It'll leave a ghost trail there beside you. You've got your biometrics. You've got your speed and a location map. So now you can start bringing gamification into the real world using now this heads-up technology. And what's interesting here is this is not about overlaying too much information. We're visual creatures. We can process visual information 50,000 times faster than we can actually read information. So augmented reality, whilst it will give us these superpowers, it's going to be very much a visual led interface where you can discern that data very, very quickly. A visit to a doctor is going to be utterly transformed. All of the paperwork is obviously going to be digitized, but he'll be using smart glasses to overlay, schematics, physiotherapy routines, etc., directly onto the patient. It's going to be absolutely, amazing once we get into this new, heads of world. When we get into collaboration, so obviously we were already seeing this, we're coming out of the pandemic, we're starting to look at how do we collaborate in this new world, how do we collaborate remotely if we can't travel. We're going to start seeing holodecks, we're going to start seeing holograms. So you will be sitting, in a location, but remote workers are going to be beamed in using smart glasses, and you will be interacting with our holograms in real time. The holograms will be so detailed, they'll actually be spatially aware, they'll recognize your surroundings, you'll recognize their surroundings, and that means you will be able to collaborate infinitely using hands, using gestures, but actually start manipulating digital assets. So this is happening. If you check out Microsoft Mesh, they did actually a release 2 days ago where they actually showcased something quite similar to this. So this is happening very, very quickly. If you look at children's entertainment, AI holograms are going to be basically with your children from when you download them from the App Store to actually when they grow older. So they will become a virtual companion that's going to be there to basically do everything from dance lessons to mental health to answer questions. But imagine an AI that's actually going to grow with your child. It will age with your child, and the responses and the types of experience that they will deploy will change over the course of the child's life. It's going to be absolutely fascinating to see that take place. Advertising is going to be utterly transformed as well. Advertising will become a visual experience. So if I look at a billboard in Times Square with my smart glasses, the Range Rover can actually drive out of that billboard in full life scale, park beside me. I could configure that Range Rover, change the colors, change the interior, and order a test drive there and then. And that could be basically sitting outside my front door in the next morning for me to take a test drive. So taking an embedded experience, mixing that with data, putting a commercial element around that, and making that embedded, it's going to be absolutely stunning. So advertising will be an adventure as opposed to a banner ad that you potentially might click on. IoT, cities are going to become very, very smart, but how do we actually visualize, and how do we get that information and actually do kind of cool things with it? Well, if you think of an augmented windscreen in a car, and again, we're a visual species, so instead of actually reading information, we're seeing information. So very quickly we can see the red areas looking through the windscreen where that motorbike might be about to drive across the driving line. There's pedestrians opening car doors, but visually we can put these prompts at a very, very high level that it doesn't over stretch what you're actually doing. It enhances the experience you're already having. So visually you can see what's going to happen there very, very quickly. We may no longer be using TV sets in the near future. Why buy one TV set that you fix on a wall that you can't do anything with? With smart glasses, you'll be able to invite friends over to your back garden. You're going to have a barbecue. You can drop a jumbotron in the back garden that you can actually all stand there and have a multiplayer experience watching that. You will be able to customize the content that appears on those screens and basically have a personalized, unique, fluid experience using not only video, but repurposing video into a different type of interface to make that a combined experience. Really, 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 really exciting to see where these experiences will go. But what's interesting is if you want to bring that experience into an even larger group of people, imagine going to watch, a football game once the pandemic is over. You could drop your own jumbotron above the center field, because if you want to watch highlights from other games that are taking place at the same time, or the stadium owner can actually drop these jumbotrons and charge these as new service sets and new experiences for fans to engage with them when they're actually in these environments. So it's going to be, as I said, this massive rush towards the digital world bleeding into the physical world, and all the amazing things that we can do in the digital world will take place in the physical world. And something very simple as weather. So I can download a weather app now and it'll tell me roughly, it might rain, it might be sunny, but it's quite vague. But imagine when you put on your smart glasses, you'll be able to see live biometric information displayed in a heads-up way, and you can see very clearly that the rainstorm that you're looking at is actually going in a different direction. You're not going to get rained on. All is good. Carry on about your day. So being able to take disparate data sources and pump them into visual UI, visual UX, and create compelling opportunities and new service sets. That's essentially what augmented reality is going to enable. I want to touch on very quickly some metaverses. This picture is quite interesting because you can look at this picture and think, well, is this the office of today, or is this the office that we're going to be heading back to? It potentially could be, but it's not. What you're looking at there is actually virtual reality. That is the level of detail that we can now build in virtual reality, where it's human eye resolution. You actually cannot discern what's actually real and what isn't real. So we can actually drop you in this virtual reality environment now, and this could become your new work hub. This is where you could go and collaborate with your colleagues in the near future. But coming out of a pandemic world, maybe this isn't good enough. Maybe we need to change this completely. Maybe we want to go to an alien world. Maybe we want to build our own persistent universe where we engage, where we work with our colleagues. It's going to be avatar led, but we can bring in all sorts of data into these persistent universes. So persistent universes are going to be another key that we're going to see moving forwards. And I'm going to just finish up very briefly talking about Fortnite. We cannot talk about innovation and moving forward around metaverses without talking about Fortnite, because the numbers behind it are absolutely crazy. But what's really interesting is Fortnite began as a game, but quickly evolved into a social interaction. So players are not necessarily logging in to actually play the game. They're actually going in to be with their virtual and their physical friends. So I see it when my son is playing, 11 years of age. He's got Fortnite playing on the Xbox, and he's got Discord spun up on his iPad. And he's talking to his friends down the road, around the world, and they're all having a great time. Really, really interesting. But when we look at the numbers, behind Fortnite, it's absolutely crazy. They're logging 3.2 billion hours a month of gameplay at the moment. They're doing 5 billion in revenue on digital assets in Fortnite. 250 million players. And this shot that we're looking at here is Flushing Meadows. This is where the US Tennis Open takes place in America. You know, we've got 40,000 people sitting here watching the Fortnite World Cup being played. So if your kids are playing computer games, let them play computer games, because research suggests that playing video games can change the brain regions that are responsible for attention, visuospatial skills, and it makes them all more efficient. It enhances perception and vision, decision making, problem solving, and curiosity and learning. All the skills that they're going to need for their future work careers. So let them play games. And just to let you know, a 16-year-old American kid won the Fortnite World Cup. A guy called Kyle Bugga Giersdorf. He won $3 million for playing Fortnite and winning the World Cup. So he won more money playing Fortnite and winning the World Cup than Tiger Woods won for winning the US Golf Open. So absolutely crazy, absolutely crazy. This world that we're heading into is going to utterly transform and utterly change. So I'm probably nearly out of time here, so I'm going to wrap this up very, very quickly. The change is coming, radical innovation is coming. The next decade is going to be utterly transformative, and we will not recognize where the world is going to be in the next 10 years. Embrace it, don't fight it, because you're not going to be able to resist them. Get on board. And my final note to kind of finish on here is explorers and true explorers have no maps. We have to be brave, we have to be curious, and we have to move forward. So thank you very, very much. I'll wrap it up there.
Wow, Keith, that was incredible. What a great note to end this event. Wow, that was incredible. I feel like I feel like we're going to have to play catch up somehow, But thanks, Keith. That was amazing. Thank you so much again for your contributions. We greatly enjoy these presentations. And we will be in touch in the future. We definitely you have to keep in touch. It'll probably be new reality by the time the next event is in the next month.
It could be.
Thank you so much, Keith. A pleasure to see you.
Thank you very much. Thank you.
Thank you.
So I'm afraid we did overrun a bit, but I think everyone enjoyed that little roller coaster we had at the end there of the future of the world as we know it, and we are all keen explorers. I think I'll go and watch that Disney movie Up again. Explorers. I just want a quick update just to let you know the results of the polls, because it's always very interesting. Pretty much on the most disruptive payments trend, 3 tied for first place. data and AI, I don't think that's much of a surprise. CBDCs and cryptocurrencies, and contactless. So those three are going to be the most disruptive payment trends going ahead. Not a big surprise there. A bigger surprise on the triggers for the next wave of innovation. The winner by a long way was mobile. From that last talk, I think it's probably going to be glasses, to be honest. But crypto and regulation dived in there. Since when regulation has become equal second place in innovation is new to me. But anyway, there you go. That's what the crowd said. And post-lockdown, what was our dream? What did everyone want to do? Travel, number one.
Travel.
Number two, equal second was family dinner and a hug, which is great. And I just have to throw in that no one, 0%, wanted to return to their workplace. So I think that's a pretty good sentiment. So thank you all. Thank all the speakers from both panels. Thank the two special speakers, including Keith at the end there from MasterCard. And thank QUBE, thank Marta, and thank Lily for putting all this together. Thank you all. And goodbye.
And thank you, Robert. Thank you so much. And thank you to our sponsor, iSpiral. We really appreciate all the support. And yes, thank you so much from everybody and the QUBE team. There's quite a few of us behind the scenes. So thank you very much to Noor, to Angeliki, to Raluca, to everybody. We have to mention it. Thank you to everybody for attending. We had such a great turnout. So thank you. You'll all receive a recording in your inbox as well. So if in case you want to watch the replay, plus the evaluation form will be sent along in the same link. If you can just give us some feedback, that would be wonderful. So thank you to everybody. Really, really wonderful. Marta?
Thank you so much. Thank you. Great discussion. I'm really happy that also a lot of questions. So there was a real interaction, and I hope you enjoyed it.
Yes, thank you so much. And we're looking forward to face-to-face events in September, October, November. So watch the space. We'll definitely be communicating with you. Thank you to everybody, and we wish you all a wonderful day. Robert, fabulous job. Really appreciate the support. Thank you so much. Have a lovely day. Bye-bye.
Thank you. Bye, everyone.